Welcome to the Sykes & Company PA video blog featuring Ollin Sykes.
One secret about inventory that most pharmacies don't understand. What is that?
Well, inventory, of course, at any point in time is a balance sheet item in that it's very simply the quantity that you have on your shelf times your acquisition cost. And what a lot of pharmacies don't realize is that with the constant ordering from multiple vendors, even though you may have a primary wholesaler with secondaries that you use, your script management system is typically tied into the price acquisition input daily or weekly info that you get from your primary wholesaler. So if you are purchasing from several generic houses, as an example, versus your primary wholesaler, your price acquisition costs could be materially less. And if those numbers are not locked in your script management system as you purchase from your secondary and third and fourth maybe generic houses that you're using, that your inventory could be overstated in terms of the cost invested into that inventory at any point in time. And we see this quite frequently as being an issue. Some of the script management systems have a feature that allow you to lock in on a price as it's purchased. So as those next acquisition cost updates come into the system, they don't automatically override the cost that you have locked into the system. If a particular item, let's say you're buying generic Lipitor, and you've been paying, for lack of better conversation, let's say you've been paying $50 per bottle, whatever that bottle quantity is, and you've been buying from a generic house for $30 per bottle, there's a $20 differential for the number of pills that you have in that particular bottle. So you could either be overstated or understated in your inventory depending on what pricing mechanism that you've chosen. And if anytime we have to adjust inventory upwards, it decreases your cost of goods sold and increases your gross margin, increases your profit. So it does the actual reverse of what you might think in terms of your profit calculations. And conversely, if we have to lower inventory, it increases your cost of goods sold, decreases your gross profit, and decreases your net income pre-tax. So it's a very important feature with the automation that's used in many of the script systems today that so often is overlooked by many pharmacies that we run into. Inventory is in the correct inventory as of a moment in time, typically the end of a month, end of the quarter, end of the year, is extraordinarily important in determining the most accurate gross profit margin that you have for your pharmacy. And your gross profit margin, and your inventory, are so closely tied together, there's nothing else that's more important with respect to your pharmacy.
Thank you for joining us today. If you want more information or have any questions, please feel free to contact Ollin directly.